Hey there, welcome back to No Reservations, Kasey Anton's Guide to Restaurant Success. I think that's the name of this. It's been a month. I'd like to take the month of July on a sabbatical, for lack of a better word to use, where I step away, step out of the office, let the inmates run the asylum. They do a great job, if not better than I do. And I go do work on other projects, do other things. But I am back. And so here is my first episode back. Episode 16, Financial Forecasting, Planning for Long-Term Success. I say that title lightly because I have some pretty strong opinions when it comes to financial forecasting. I find that to be the equivalent of having a crystal ball to know exactly what's going to go on in your business. And nobody has that. If you did, I mean, you'd be a gazillionaire by now. You'd be selling those like crazy. But it is an interesting topic to go over because we are currently working with a new client, a new restaurant client. A lot of our clients are restaurants, the majority. And they came to us because they really wanted us to help them dial in their forecasting. It's a newish restaurant, been open for under a year. And the reason why they needed, one of the reasons, probably the main reason why they wanted some financial forecasting is because they knew they were going to go into a slow season. The summer is slow in the city often. And they wanted to know how much more money the investors should put up, or how much of a loan they should get, et cetera, to get them through the slower time and how all that works. Which is a great reason to do financial forecasting for that. So there's a lot of good reasons to do it. And in this example, a restaurant that's notoriously slow at a certain time of year. So again, certain cities, especially this one, definitely empties out a lot in the summer. So sales go way down. When I had my restaurant was in downtown Boston, also was slower in the summer. And if you can do financial forecasting, here's what happens. So if we were sitting, back earlier in the year and said, okay, summer's coming, what's that going to look like? And you could do a forecast saying, okay, I think that our sales are going to drop 20%, 30%, whatever you think it is. And you map that out on your P&L. Here's what we would do. We'd either create a new P&L, or we would use an existing one. So that you capture a lot of the actual data, like the overhead, some payroll, things like that. And then we would adjust it on a spreadsheet to say, okay, so we think in May, June, July, and August, our sales are going to drop by 20%. So we're going to adjust that. We also need to adjust down our cost of goods sold, because presumably if we're going to sell less food and less drink, then we should buy less. So we're going to put in that number. The same with payroll, right? If you're going to do less sales, you want your payroll to go down. But with that said, if you have a lot of people that are on salary that you don't plan on laying off, right, for the summer, and why would you? Most people don't. You still need to pay them. Well, that's really good information to have, because you're going to keep them. It might suck for the slow months, and that your payroll maybe was, on a good month, 30%. Now it's going to jump up to close to 40 because the months are slower. So this is why we do the forecasting, because we know, okay, we're going to run a 40% payroll. Let's, in this example, for these slow months. And then you have your OPEX, right? Your overhead operating type expenses, and you're going to do your best to control them. But a lot of them are set, rent, utilities might go up and down. So you do your best to kind of, guess at what those are. And the bottom line is the bottom line. And if it's negative, because your sales have dropped so much, you can only drop your food and beverage costs so much, you can only drop your labor so much without the risk of losing good, skilled people. You want them back in the fall when things heat up again. Then you might be running at a loss. And what does that loss look like? And if you add up that loss over the months that you think you're going to be at a loss, so May, June, July, August, that number could represent what you need to get in a line of credit from investors or whatever that you might want to have, so that you're not freaking out week after week after week when it comes to paying your bills, making payroll, etc., during your slow time. So that is a fantastic reason to do financial forecasting for your business. If there are ebbs and flows, if it's not really consistent over time, that some months are going to be harder than others, then this is a great reason, because what it does is it gives you the information. And It's not going to be exact to the penny. It never is. I don't know any business that runs the exact same to the penny numbers every single month, month after month. I not to say they don't exist. It's pretty rare, at least rare in our world, to see that. Things are going to change. COVID's going to happen, elections, whatever it is. Rent goes up and down, utilities go up and down, payroll, somebody might leave, you might have to add, you never know, right? It's never going to exact the, and so don't even try and be perfect on these, because it's a waste of time, and time literally is money when it comes to small business, when it comes to a lot of things. So you just want to get close enough so that you can wrap your arms around and be like, okay, this is about right. So back to my restaurant example. If we look at, say, May through August, we have a spreadsheet, we have it by month, and using percentages, we could say, okay, well, we think we're going to drop down 10, 20, 25% in sales. What's that going to, and then you do use the formulas, something that we do. You can create your own formulas in Excel. It's kind of a Excel 101. We can say, okay, well, if we run a 30%, what should, food costs, what would that look like? Here's our budget for food and beverage. Where can we cut back? That's when you can start looking at, maybe you run a different summer menu where things have a greater profit margin. Maybe you take things off your menu so that you can buy less expensive things. You figure it out. Every restaurant is different when it comes to the solution. Those are just a few. And the same with labor, which is probably the biggest issue that happens when sales drop. You can't always adjust your labor immediately to drop with the sales. If you have a lot of salaried employees or employees that you need to give hours to, whatever, because you don't want them to leave, you need them for the fall, winter. So now like, hey, I got to suck it up. I got to pay these people. Then you have all your overhead operating expenses. Then you look at the bottom. It's like, okay, well, I'm going to lose money in these months. Tally it up. It looks like we might lose 60, 70 grand. Let's tack on another 10, 15% for contingencies. Now we're at 70, 80 grand. Okay. Now, here's the fun part. If you are able to somehow get funding, and let's hope that you are, because if you don't, you're going to end up having to back into these losses using usually expensive funding, like high interest credit cards, or those terrible third party, where they attach your credit card deposits and take 40% of them. Like, those are terrible. But if you can be ahead of it and say, okay, we're going to need to raise 75, 80 grand. Can we apply for a line of credit or a loan? Can we tax 1, 2, 3 of our 4 of our investors and see if they're willing to each give us a couple grand to get us through? You could use in-kind, which is a company that invests in restaurants in turn for gift certificates. Really, look into it if you don't know about that. So whatever it is, and maybe it's a combination of a few. Maybe you look for 20 grand here, there, everywhere. Now you get the money in. This is what you do. You put the money in a separate account. In Profit First Land, we call it a drip account, or in my book, I call it a seasonal account. And in my example right now, you can call it seasonal, call it whatever you want. But you put that money, you don't just dump it all into your payroll, into your OpEx account, because you're going to use it up. Parkinson's Law tells us we're just going to use it up. You put it in the drip account. And then you only move over from that drip account what you actually need to get you through that month. So if you close May or June, May is usually a good month either way. So we'll say June. So if you close June and you're like, okay, June, we're short. We lost about 10,000 in June, and here's what's going on, etc. Can we get by? Can we do things better in July? Maybe we can drop our food costs, our beverage costs by selling sangria, whatever it is. Okay, then take 10 grand out of this new drip account, the borrowed money, move that over and put it in your payroll, your OpEx, your food and beverage, however you have your account set up. Just drip that in, whatever, like 10, 12 grand. That's what I need for June. So now that leaves, 50, 60,000 in that drip account. And then you finish July, maybe it's a bigger loss. Maybe it was slower. Maybe you couldn't control your costs as well. Okay, now we lost 25 grand in July. Same thing. Okay. Is that the best we could do? Let's try and fix things for August, which might even be slower. And let's move 25 grand from the drip account over and see if we can make do. So it is going behind the game, right? So July is closed and now you're seeing what the books are, etc. But we're dripping in the account, and we're also trying to do better so that we may not have to use all of that borrowed money, because maybe we can give it back, or maybe we can use it for something else, or maybe we can help pay down the balance, or whatever it is. rather than just dumping it all into your, whether it's your OpEx or your payroll, however you think you need it, and just absorbing it all, which is what will happen. So I love forecasting for that reason, but here's where people go wrong. As I said earlier, they go wrong because when they do forecasting, they're trying to get it exact. That is literally chasing your tail. You will never get it. There's no exact to be had in this scenario because you don't know what's going to happen in the future in these forecasts. You don't know if there's going to be a hurricane, a monsoon, a snowstorm. You don't know what is going to happen in the world to make it exact. So let that perfection go. All you can do is, okay, if everything remains status quo, and knowing what we know about the industry we're in, the neighborhood we're in, whatever data you can use as the intelligent, skilled owner that you are, use that. That's enough. That's more than enough to throw into your financials, have a conversation with your bookkeeper, your accountant, your partner, however you do it, and say, okay, I think that this summer, these months might end up looking like this. And if they do, if I'm right and our sales drop by this and we can only control this much, I think we're going to lose this much money. And if so, let's try and get ahead of it and go find this money somewhere and set it aside and only use it if we need it. And it's not going to be exact. If you're within a few thousand, if you're within a 10,000, I think that if you're within 20,000, I'd still probably say that's probably pretty good. Right? So it just needs to be something. Something is better than nothing. So I love forecasts for this reason. And if you have a seasonal business or you're in a startup business and you think you might be undercapitalized, great reason to do forecasting. If you are in a business, like mine, so I have a service-based business, right? Bookkeeping, accounting, business consulting, service-based business. I don't really need to do forecasting unless I'm going to plan on a major purchase, like I'm going to buy a condo, like a business condo or whatever. I don't really need to do it because overall we don't really have a down period. Month after month, they look similar enough-ish, they're within 10, 20% each month. So I kind of know what's going on and I don't need to spend my time doing a financial forecast. Instead, I simply use the Profit First system in my business so that I immediately know where I am at all the time. And I'm reviewing my financials. So I always know my cash position. I always know what my reserve is. There are certain things I have on my dashboard where I just automatically know what's going on. And that's all I need. So I don't really need forecasting unless something a major change is about to happen. Or, there's another COVID spell or something similar where it's going to be completely out of whack. And then maybe I'm going to try and do some forecasting. But again, with no crystal ball, your guess is as good as anybody else's. So if it's your business, your guess is the best guess there is. And that's all it is. So again, finally, to wrap this up, the point, or really the impact a financial forecast can have is really happens when there's going to be some big changes going on in a business, whether it's seasonal, whether you're about to invest in something, whether you're going to scale back, like a material change in your business. That's when you want to do forecasting, and you do it the best that you can within reason. I think this is probably what could happen. I could be wrong. I could be right. I think this is the best of my knowledge, what I can do. And then with that information, you make some decisions. Do you lay somebody, a high salaried manager, say, do you lay them off for this period of time and will they come back? Is it worth it? Or do you go out and get an investment and drip that in over time to keep you afloat until you find those stable months again? Okay, so that is financial forecasting. That is something, if you need help with it, we absolutely do that here at Spark, but you could probably ask your current accountant to also help you with that. And that is a wrap for today. As always, we're at 14 minutes. Thank you so much for watching, listening. Please, please, please like this, share it if you can. We'd like to get the word out there. We're here to help businesses. We're here to help restaurants. And that's what we want to do. All right. Thanks so much. Have a great day.